Marc Freedman has a purpose. As managing partner and co-founder of Evolved Profits, he and his team have over 40 years of experience in helping businesses free up cash so that it can be reinvested into helping employees, growing the business, and creating positive social impact. He is a serial entrepreneur, CEO, and the best-selling author of Expense to Profit: Eliminate the Costs That Sabotage Your Growth. Marc loves helping companies create more profits while being an agent for change. This is his purpose, and in an effort to help more companies and more people, Marc, along with co-host Yanik Silver, author of Evolved Enterprise, bring you Profits with Purpose, a podcast that aims to do just that. On the show, Marc and Yanik talk to successful corporate decision makers, exploring valuable lessons learned, experiences in growing a company, ways to reduce expenses, and all the ways a company can have a positive social impact. Join us each week and get in on the discussion so we can all have more profits with purpose. And now, here's your host, Marc Freedman.
Welcome to Profits with Purpose. Today, we're going to do something a little bit different and divert from our normal interviewing a guest. And I'm just going to talk about something that I think is really, really important that every business needs to pay attention to right now if you've got under 500 employees. And especially if you have 100 or less employees. First of all, there was something called the Employee Retention Credit Act that was part of the CARES Act put in place because of the coronavirus aid and relief back in 2020. Now, the ERC, the Employee Retention Credit, has been something that's been around for many years, will continue for many years in regards to areas of devastation. Think floods, think fires, natural events that occur. And this has always been something that's been there for everybody. But Congress in 2020 in the CARES Act passed an amendment to that allowed, as part of the stimulus package, businesses that were affected by the coronavirus pandemic to be able to participate in the Employee Retention Tax Credit. So what does this mean for you? In 2020, you can claim any employers who paid qualified wages between March 12th, 2020 and January 1st, 2021, if you had experienced full or partial suspension of operations or had a significant decline in your gross receipts. Well, what does that mean? It's equal to 50% of the qualified wages paid, including qualified health plan expenses up to $10,000 per employee in 2020. The maximum credit available in 2020 is $5,000. And if you were previously ineligible for ERC because of a PPP loan that was given to you and forgiven, that is no longer something that's in place. In 2021, the December Consolidation Appropriations Act of 2021 provided, this is December 2020, provided retroactive application and liberalized all the 2021 requirements. The newer act extends the ERC to the third quarter of 2021 with $10,000 per employee max amount of qualified wages and qualified health plan expenses per quarter, and recovering up to 70% of that. The ERC is can be a credit against Medicare tax for the third quarter, opposed to previously being a credit against the Social Security tax. They added a recovery startup businesses for the severely financially distressed employers in financially startup businesses. So I was told that I don't qualify. We had a home care services company with 123 employees told by their accountant, bookkeeper, and payroll company they did not qualify. We were able to show that they were incorrect in that determination, and now they are estimated going to have a recovery of $1.2 million. A restaurant with 41 employees received a PPP loan that was forgiven. They were also told they didn't qualify. We determined that they did qualify for an estimated recovery of about $10,000 an employee, or $410,000. After taking in consideration the PPP loan and the forgiveness, because you can't use both the employee wages that were used for PPP loan. Those same wages cannot be used for the ERC Employee Retention Tax Credit refund. A nonprofit that received a PPP loan and was also forgiven, who receives government funding for payroll, is going to be receiving over $562,000. So important factors. First of all, eligible employers are differing requirements for 2020 and 21. The amount of the ERC credit and requirements differ for 2020 and 2021. Qualified wages are different requirements for small versus large businesses. And recovery startup business and severely financial distressed employers have additional opportunities for Q1, Q2, and Q3 of 2021. ERC and PPP can now both be received versus previously ineligible. And in addition, the IRS Form 941 would need to be amended for 2021 as well as for 2020 filing tax year, assuming that you qualified for both. Now, I'm going to give you 10 reasons of why you should choose us as your tax specialist for the ERC. First, we're completely success-based. If we do not find that you qualify credits, you pay nothing. You'll never receive an invoice from us. Second of all, we are working directly with licensed, certified public accountants and tax attorneys completely devoted to filing ERC. They're not pop-up consulting LLCs who have all of a sudden appeared for this opportunity and will disappear the moment ERC funds run out in 2023. Our CPAs and tax law professionals have decades old existing businesses. They're not going to disappear. Our model has our CPAs working for you with minimal effort required on your end. Our CPAs are working with you and are committed to stand with you should an audit occur, although it's unlikely. For no additional fee, we will take it all the way to tax court and defend you for the claims that we believe you're entitled to, should that occur, although we find that, as I said already once, that it's going to be unlikely. We're not operating in any gray areas. If you do not qualify, there's nothing to file, simple as that. We charge a fee only and when the ERC recovery is obtained, meaning when you get the recovery from the IRS is when your fee is due for us. There's no hidden costs, no hidden fees, no deposits. We don't cut corners. We don't have any shortcuts. We don't speed up the process unnecessary. We take the time and effort needed to find every penny you're entitled to. And that is typically taking us, once we have all documents in place that we need, typically anywhere between 3 and 5 business days to complete that for you. In addition to that, we're not the cheapest option. There's some who charge less. There's certainly a lot that charge more, but those may not be licensed CPAs who are working on your behalf, nor should there any questions arise from the IRS down the road, be able to defend your claim all the way to tax court. In addition, we do not require our clients to sign a liability waiver, basically putting all the onus on you. Again, we will defend you all the way to tax court if necessary. Our team works diligently to review, analyze, and provide our ESC findings to you, saving you numerous hours that otherwise be taken away from running your business. Incorrect filings can run into tens of thousands of dollars in fines from the IRS, well above the potential ERC recovery. Using a knowledgeable CPA can obviously help you avoid this. But why shouldn't I hire the cheapest option? Let me give you a potential example. There's a $100,000 ERC benefit available for a business. They used a discounted, inexperienced provider. Their ERC calculation was 10% incorrect, resulting in a $10,000 disallowance, a $1,000 IRS 6556 penalty, $1,000 of interest for 2 years, and $2,000 to $3,000 spent defending the audit. That hidden cost meant that it cost you 15% of your claim. You won't have that with us, and that's why you should consider using our services. So just to give you an idea of some of the businesses that we've helped by this, nonprofit organization with 30 employees with a PPP loan that was forgiven, just got a refund of $739,000. Another nonprofit with 207 employees qualified for a refund of $1.7 million. A nonprofit working with unsheltered person with 20 employees qualified for a refund of $174,000. In the restaurant business, a pizza restaurant franchise with 350 employees received the PPP loan that was forgiven, sold the business, but still qualified for a refund of $2.9 million. A juice bar with 7 employees qualified for $150,000. A Mexican restaurant with 20 employees got $101,000. A taco restaurant and tequila bar with 9 employees got $34,000. And I can go on and on and on with different areas. We got a bowling alley with 20 employees, got $103,000. A barbershop with 17 employees got a refund of $130,000. A cannabis trade association with 14 employees received a PPP loan that was forgiven, got $418,000. A cannabis glassware paraphernalia store with 32 employees qualified for a refund of $354,000, which was actually received last week. A digital media podcast recording company with 11 employees got a refund already, $195,000. A CPA and tax preparation service, 70 employees qualified for a refund of $332,000. Accounting and tax accounting firm with 7 employees got a refund of $44,000. A school, a private K-12 school with 40 employees received the PPP loan. That was forgiven, got $552,000. We have a utility metering company with 150 employees. They got $2.8 million. An HVAC company with 24 employees, $536,000. A lawn provider company with 25 employees, a refund of $107,000. A pool installer with 170 employees got a refund of $2.3 million. A transportation and logistics firm, 9 employees, qualified for a refund of $689,000. A senior home care employee with home care company with 14 employees, $44,000. And a home care services company with 123 employees, as I said before, we were able to show they were incorrect, and now they're getting a refund of $1.2 million. These are just a few examples of the businesses that we've helped. We've helped over 100 businesses. We've collected $50 million for those businesses in refunds. Look, you most likely qualify, even if you didn't have a loss in revenue. Many of our restaurant businesses who pivoted, did to-go orders, created outside seating, had increases in revenue, but their business was interrupted. Suppliers to them, like a produce company, his business was interrupted. So there's many different types of businesses that qualify, many different quantities of employees, as long as there's no more than 500 qualify for this. This money is only going to be available until the end of 2023. That said, Congress can at any time, like they did in the last act that was passed, they eliminated the fourth quarter, saving $38 billion. If they start looking to be able to save money somewhere, where do you think they're going to try and get it from? They're going to get it from things that have not yet been claimed. Our recommendation is, we hope you choose us, but if you don't choose us, choose somebody to help you get this money and get this process done. Most CPAs are not doing this because they don't know all the different rules and regulations. This has changed 4 times since it was originally passed, but we have a team ready and available to help you. Don't hesitate to reach out. Thanks for listening. And next week, we'll be back to our regular scheduled interviews.
Thanks for listening to this episode of Profits with Purpose. Don't forget to subscribe. And if you are interested in reducing the expenses of your business, creating positive social impact, or contributing to the show, reach out to Marc or Yanik with Evolved Profits by emailing podcast@evolvedprofits.com or visiting the website www.evolvedprofits.com.